Now, let me ask you something. Do you know how many people have been laid off from the Indian startup industry in just the last 5 months? Well, close to 9,500 people. From edtech companies like Vedantu to companies like MPL are cutting down their cost. They are removing people. But the big question is why? Why a globally well-known startup industry in a country like India faces such a drastic issue? Why are these companies removing people? And can we say that right now the entire startup bubble is bursting? Well, let's find out. Now, last year, we were minting new unicorns. Now, unicorns are a companies which has a valuation of more than $1 billion. In India, a total of 42 new unicorns were born in 2021, which means that a total of $42 billion was invested into the Indian economy in 2021. And this amount is actually 3.8 times higher as compared to 2020. And if you see, India has the third largest startup ecosystem in the entire world. If you compare total number of unicorns born in India versus China, India had more unicorns in 2021 as compared to China. China only had 40 versus in India there were 42. But right now the entire mindset has changed. Right now almost 9 out of 10 startups are failing in 2022. So let's understand why. First, you need to understand that there was excess amount of money in the entire ecosystem. So a majority of this money found its way into the fintech and e-commerce space in the Indian market. Almost 75% of the entire capital was allocated into these two segments. Almost $10 billion was invested just in fintech space in 2021. And this was mainly because of several years of work, maturing digital infrastructure, UPI payments, cheap electronics, a demand for the startup environment, a positive macroeconomic outlook. Also because there were multiple rules and regulations which is implemented by China towards the fintech and edtech space, and therefore more capital was deployed towards India. If we just see the data of 2021, the seed funding stage capital was growing. The seed funding stage capital last year was almost at 290%. If you see companies which are in Web 3.0 or in crypto space, they were seeing a boom. Almost about $500 million was invested into companies which are in this particular space. Also, startups in general, they need clients fast. Their main focus is towards growth and increasing their revenue, but less towards profitability or less towards reducing the overall burn. And therefore, with these facts and investments, it is quite clear that just because investments are being made, it does not guarantee a success of a startup. Now, let's understand the current scenario. We all know about the Russia-Ukraine issue, which has caused the oil and the gas prices to go up. The global supply chain has been impacted. There's a very high inflation rate which is currently happening. Also, the economy from a high growth economy has moved towards a stagflation period. The tech bubble is crashing, whether it is in the US market or in the Indian market. The tech stocks are crashing in general. The Indian rupees is becoming much more weaker as compared to the US dollars. The venture capitalists are also struggling. They are finding it extremely hard to find new funding sources. If you see, their entire investment portfolio are not doing very well. Previously, Tiger Global and Sequoia Capital were in the top spots in terms of deal volume and in terms of the capital which is deployed. But right now, if you see Tiger Global Technology, their portfolio has been hit by nearly $17 billion in losses, while SoftBank, their portfolio has been hit by nearly $13 billion of losses. Also, private equity and venture capital investment in April of 2022 has declined by nearly 27% year-on-year to nearly $5.5 billion due to the entire slowdown in the large startup investments. Also, Y Combinator, which is a very well-known equity venture capitalist, is reducing its investments as well. So how does this impact the entire startup space? Now, during a bull market, investors are more keen or more focused towards growth. They want market share, higher revenue, higher GMV, and hence the focus is more towards the growth in general. But during a bear market, the focus is more towards the product roadmap and efficiency. Also to understand if the customers are actually buying the product in these kind of uncertain conditions. Also, they would want to understand how can we reduce the burn further. This graph currently shows the total investments which have been made by the foreign investors. We can also expect a lot less funding, especially towards Series C and Series D level startups. We can also expect tighter negotiations where pre-product startups will definitely struggle to get a higher valuation. Oftentimes we think that because India has a huge population, any product in India can become successful. But over here, I would like to show how Nikhil Kamath, who is the founder of Zerodha, how he breaks down the entire population of our country for his company. So whenever people tell him that there are 140 crore people, but only 9 crore demat accounts, this is how he breaks it down. Now, definitely India has 9 crore demat accounts, but they are not unique. The unique count is much lesser, which is about 6 crore. Now, in this 6 crore also, the active demat account, which is holding more than 10,000 rupees, is about 3 crore, which means that your entire target audience from 140 crore has actually been coming down to about 3 crore. And this is exactly how every startup needs to understand its potential customer base. Also, companies like Boat, Oyo, Snapdeal, they are all postponing their entire IPO. Also, we can expect a lot more layoffs to currently happen because startups are trying to increase their runway. And this runway is purely in terms of how many months can they operate with the existing amount of capital. So definitely, startups are trying to reduce their current burn, and because of which they are laying off people. Unacademy, Vedantu, Cars24 all have already started to lay off people. 77% of the VCs in India believe that Indian businesses, they lack originality and innovation. According to a recent survey by IBM, which is the Institute of Business Value, it shows that 91% of the startups in India fail within the first 5 years purely because of lack of innovation. Now, although India has the world's third largest startup ecosystem, it does lack meta-level companies like Facebook, Google, Twitter. Indian startups are well known for copying and then executing them, like Ola or Oyo. Also, right now, a lot of startups are in their post-recovery period where they are just recovering from the pandemic, and they were not expecting for the private and public equity market to dry up so quickly. A great example of this entire scenario can be Dormant. Now, Dormant was an on-delivery service providing app. Now, they used to provide on-demand electrician, plumber, carpenter, electrical appliances, etc. Now, what went wrong with Dormant? Well, first of all, their processing, pickup time, and their packaging was extremely high. So the overall operational cost was much higher than what was expected. Also, Dormant was not able to reduce their entire burn, and they were not able to generate profit. Also, because of this, they were not able to address the unit economics and resulting in the uncontrolled cash burn, because of which the company was having massive losses, and at the same time they were not able to incur or raise new funding rounds. So as a result, they were not able to scale up and they had to shut down. So in summary, 2021 was more about achieving scale, was more about achieving growth, but 2022 is going to be more focused towards sustainability. It is going to be more focused towards ensuring that your product is the right fit for the market. We have seen a similar situation in the startup space back in 2011 and in 2013. The problem is startups tend to raise millions of dollars in form of capital despite the fact or without actually checking that their product is the right fit for the market. So I hope you've understood why so many startups are failing right now in 2022. And if you want to watch more of such videos where we talk about macroeconomics, where we talk about the businesses in India, then make sure you do follow, you do subscribe, and I'll see you all in the next video.